In this video, we're going to review some altcoins and I'm going to explain exactly what I think the trend is for 2023. Those of you who've been tracking crypto for a while, especially this year, won't be surprised to see charts like this. Pretty much standard Christmas tree boom and bust formation on virtually all of the altcoins, and they track each other very closely. So I'm on Mana USD here, so Decentraland, and let's drop to a daily chart. And what I'm going to do here is I'm actually going to compare another altcoin to show you, first of all, especially if you're new to crypto, how closely everything is correlating, especially in a bear market like this. So if we click compare, and let's add Sand USD, for example. So this is Sand USD and Mana USD, and have a look at both charts. They're almost identical to the day, and this is how it looks for most altcoins. Hence, I don't understand sometimes why people during a bear market especially are picking certain coins over others. It does not matter at all. When we're in a fully fledged bull market, that's when you want to pick those coins that are lagging. Right now is a time to stay on the sidelines. Now, it can be difficult. People get impatient, but that's the right place to be. So the real question we're trying to answer today is, where's the bottom in this particular market? And this is where, again, people just think we suddenly switch from a bear market to a bull market and back. It's not that simple. What we're going through right now, for example, hasn't happened in 40 years with regards to this kind of runaway inflation, etc. So let's talk about that before we get back to the charts here. Let's have a look at interest rates and let's talk about Fed policy, because I think that's really important as well. If we're going to try and determine where crypto is going to go, no small news story next week is going to make a massive difference to crypto. It just doesn't work that way. We know what the game is right now. We know why everything peaked here at the end of 2021 and why it's been crashing ever since. And we know that because when you look at the NASDAQ, it's the same chart. It's just the prices haven't dropped as much. So let's say, let's take, for example, Tesla. So this is a chart of Tesla, but have a look how similar this chart is as compared to Sand USD here on the chart. And off the peak here, Tesla is down around 70%. So actually not far off some of the altcoins. Very, very similar pattern, very, very similar kind of situation. And what's taking place here is it's a macro event. So let's have a look at the interest rates. So these are the interest rates, and you can see inflation looked like it had peaked around June time. Everyone thought, okay, bull market back on, let's get on with it. But again, it's just sometimes it's just the basic stuff. People don't even understand that when inflation peaks and it's coming back down, that doesn't mean prices suddenly become stable. That just means the rate at which prices are increasing is slowing down slightly. We still have rampant inflation anyway in the system. That has not gone away. And this is the other thing. So when you hear people talking from the Fed, right, Jerome Powell, obviously 2%, they're always talking about 2% as a target, which is something that they never ever hit anyway. They're either below it or just above it. But the 2% target is, I wouldn't call it a red herring, but basically it doesn't really matter. What really matters is what's going on underneath all of this, and that's the money printing. Because there's a big problem now because they can't do that. And that's what really works to help kind of stabilize everything, keep everything stimulated in terms of the economy, keep everything ticking over, keep people borrowing money. A lot of big companies like, for example, Facebook, they were buying back their shares. I'll show you that in just a minute. But basically that kind of game, let's call it a game, it doesn't work when inflation is really, really high. Hence, the only option they have is to be extremely aggressive here. So much so that they actually need people to lose jobs quickly, and they need prices to quickly become unaffordable. Prices need to, things need to get to the point where people just can't afford stuff. And that's the only way. If the demand goes down, that's the only way prices will come back down. They need this kind of crash thing to happen. They won't say that. They'll never admit that. But that kind of needs to happen. And it's not happened yet. We're not quite close to that yet, but we're getting there. So when you have a look at the altcoins and you see them absolutely trounced already, let's go into a 4-hour chart here. And you're looking at it and you're thinking every single time you're thinking, so let's go from the peak here. So this is what happens in a bear market. You know, prices go down, you get a rally and everyone thinks that's the bottom, and then it gets wiped out again and again and again and again and again. And it just keeps on going that way. And now we're having a bit of a retracement again and people are trying to pick bottoms. Now, is that the best way to kind of approach this market, or what is the best way? I'll get onto that in just a minute in terms of what how I'm approaching it personally. But the problem is, it's very, very difficult to pick a bottom. However, but also because we're so much attached to what's going on with Fed policy right now, never has a market been like this. We're literally on life support from the Fed. So if that's the case, weirdly, it doesn't make investing more difficult. It makes it easier because this is all you need to care about. All you need to do is wait for the green light. As soon as inflation starts dropping rapidly and the Fed are confident that they can reduce rates, but more importantly, reduce rates and get the printer running again to stimulate the economy, which means basically just throw money all over the place, people borrowing again, etc., etc. That's when the fun and games begin again, and that's where you invest in anything and everything, and it all goes up. That's just how it works now. It's sad that the markets come to this, but everything's correlated. It's so obvious based on everything you've seen over the last 12 to, I would say, 16 months. That's what's going on. To be honest, ever since COVID hit, so even longer, it's obvious now what the game is. And we're just seeing the reverse of what happened in March 2020. It's just the reverse now. So if you have a look at something like Facebook, this is the scary part. So actually, well, Meta. So Facebook is down a hell of a lot off its peak. So how far are we down here? Up at the kind of peak drawdown there, it was about 76, 77%. But what's interesting about this is not how much it's retraced and crashed. What's interesting is when things were good, what all these companies were doing, same game. When the prices were really high around this region here, what were they doing? They weren't innovating at all. All they were doing was buying back their own stock. That's literally all they were doing. Buying back their stock with cash that they have. And then they were making profits on those stock buybacks as well because everything just kept going up and up and up. And that game's not working anymore. And the problem is some of these companies have a lot of debt. And because the rates are going up, they owe more money as well. And this is why suddenly you're seeing everybody obviously cutting their staff, making those kind of difficult decisions. And it's not one company. It's all the big companies. Why? Because I've said it just earlier in this video. Everything's correlated now. Everything's the same. It's not like one company's a million times better than another. When it comes to the big companies, like the big tech companies, for example, nobody's avoided 77% retracements in the NASDAQ. It might be slightly less or slightly more. So what does that mean for altcoins? Well, if everything's related, then it's kind of a little bit easier because everything needs to drop more, unfortunately. And we're getting closer to a bottom and everything's correlated. So it doesn't matter which one you use. You can use Cardano. You can have a look at XRP, Mana, Sand, I track all of them, but they're all doing the same thing. There's just some that you have to be extra careful about, like Solana, because of all the problems with FTX and all the unknowns. Like, one thing you don't know are what are the unknowns. Why take a risk, therefore? Why not just stay safe? Obviously, you've got Ethereum and Bitcoin, and then you could choose a few of the slightly safer altcoins to invest in. Now, when is the right time to invest in these? Well, let's have a look at that. So if we go for Sand, for example, one thing I'm looking for, especially when you get two kind of swing lows here, one thing I'm looking for is divergence as well. So if you use basic indicators like momentum indicators, I prefer to use RSI and MACD. You're looking for a little bit of divergence here. And you could argue that there's a little bit of divergence here. Let's go into a daily here and see if there is. And what that basically means is you're getting a lower low, but a higher high. So you are getting a bit of divergences. So sometimes that's a good sign. But apart from that, in terms of technical analysis, you don't have much to go on, unfortunately. This is where it gets very, very difficult. You're more with the naked eye trying to see whether the retracement we are now making is impulsive in nature or is corrective. And to the naked eye, how that will look is an impulse is almost kind of like a straight line where a correction is a lot of overlapping price action. And if it's a correction, they tend to break down again. So you see this overlapping price action, and then you get a very impulsive move. And now we're trying to see, are we going to get more of a kind of V-shaped bottom where we kind of go up like this, or are we going to get correction? Now, where could the next level be if we go down again? That's where you have to look left. That's the only place you can look. You have to have a look at previous price action to see where the support was. And we did hit previous support here, but then you look at the next levels and they're a lot lower. So it's like kind of 16 cents on Sand USD. So you're going a hell of a lot lower there. Another level of resistance here was at 36. So we might not be far away, but then how would you invest in this? Well, my personal approach to this is we could be in a bear market for a while again. Yeah, it could be, weeks to several months. It could easily be 6 months of us grinding down or having a sudden crash moment where we suddenly drop again another 50% on all of the coins. Scary, I know, but it could happen. And then we pick up again. So there's two ways you can approach this. These are the ones I'm looking out for. So way number one, next time we get a panic dumps are the ones where in the space of a week, we move very, very quickly in terms of price. We might move down 50% or something. On a panic dump, one way you can approach it is you can invest blind. As you get the panic dump there, you invest in it blind, but a small proportion of your capital. So you enter in here, and then what you do is I hate dollar cost averaging. I think it's a sure way to kind of lose a lot of money, especially in a bear market. However, on a massive plunge, your risk is a lot lower because you're already buying suddenly 50% less than what people were paying last week. And last week is already discounted 80% to what the peaks were. So you're buying at a very, very good price. And then what you can do is you can do part of your investment here. And then if it drops a little bit lower or goes sideways, you can make another second investment. So on a panic dump, you can jump in. That's number one. The second way to do it is wait. Wait for everything to reverse and for us to get back above places of resistance, which were these support levels here. And once we're above that, you'll see price go through, find support on that same line, and then you can invest. You're going to make less return. You're going to miss out on the first 2x. But it's worth giving up 2x, because if you believe, like I do, that when they get the game running again, this rigged game, which is all money printing, when it's running again, everything's going to go up. Well, if it is, you just have to put your cash in anything and it could go up, and it could go up considerably. Because why can it go up considerably? Because they kind of don't have any control over the financial system anymore. It can't really stay sideways. It's only ever dumping if they're not giving away money and very, very low interest rates, or it's increasing. Now, remember, it's not just what you call quote unquote money printing. It's the interest rates. If you have stuff at 0 or near 0% or even negative interest rates, where it's kind of a no-brainer for people to borrow money because it's not costing them anything. They can get into the lowest yield investment ever that's only returning 2% or something, and they're already making money on what they borrowed a lot of the time, especially the bigger companies. So this is the kind of situation we're in right now. Sad, I know, and scary. And, we're at the end of a 40, 50 year kind of financial cycle here. And who knows how it's going to end after everything kind of goes crazy again. But it will. And maybe after that, they'll have to look at the financial system again, or they'll have to start including kind of blockchain technology. There'll be digital currencies. Who knows? I have no idea. But all I know is that this game is very, very clear. Don't invest in anything right now. Stay on the sidelines. Wait for everything to either dump a lot in a short period of time and then just jump in, or just wait for everything to reverse. So sit on the sidelines, sit on your cash, wait 6 months, 12 months, however long it will take. Doesn't matter when it happens. There's no point trying to predict exactly when it's going to happen. It's going to be obvious when it happens. It's going to be very, very obvious. Basically, inflation is going to come down quickly. Everybody's going to panic thinking the economy is going to crash now, and they're suddenly going to pivot completely, and they're going to hint at the right things. They're going to say things like, we're very concerned about unemployment now, and inflation is getting too low, and our new target's now 3%, not 2% anymore, and they're just going to pivot. And my final tip with altcoins is stay close to the kind of safer altcoins. Even Cardano, I would consider a little bit more safer than some of the other ones. I won't go anywhere near stuff like Solana right now at all. XRP is kind of in between, but you want to see fresh lows. That's the good thing about Mana Stand. You're seeing fresh lows. That's what you want to see. In XRP, you're seeing all of this sideways price action. That's all corrective, suggesting it really needs to break the lows before it can reset and go up again, which is what I don't like. And you'll find some altcoins take off more than others. Don't get FOMO. Everything kind of follows, and you get some that lag. So if you find maybe Mana is moving first or Cardano is moving first or stuff like that, XRP is catching up, invest in XRP instead. If the other ones have gone up 5x already at some point next year, and XRP has only gone up 1x, then better invest in XRP. Never chase green candles going upwards. That's a recipe for disaster. Hope these tips help, and I'll see you in the next one soon.